Hey folks, Dan Frio here with your closing bell for March 31st, 2025. So we're going to talk about in today's video, well, the markets did okay. The Dow Jones kind of hit its correction period and then popped right up from there. We're going to talk about that briefly right through here. We got the Dow Jones closing over 400 points up. And then we're going to go over the bond market. It's actually did okay today as well. Bonds were up a little bit, causing interest rates to come down. So we're going to talk briefly on this, and then we're going to take a deep dive into, it's the end of Q1 2025. So the January, February, March is over this so far this year, and we're going to look at the quarterly results on a few different things. So I went to ChatGPT for some help, and I asked in here, give me these asset classes we're going to go through, and it's the mortgage rates, how they fare over the Q1 of 2025, average home prices, the Dow Jones, the S&P 500, Bitcoin, and the 10-year Treasury. So we're going to look at how these are doing. I'm going to look at the accuracy, how ChatGPT did, and then we're going to give you our short-term, our midterm, and our outlook on these things as well as the equity markets. So let's get over to today's video. So my name is Dan Frio. Actually, I do 2 videos a day to help explain these things to you guys. I try to bring in the equity markets and some investing so you understand that market, but we concentrate on real estate because I'm actually a loan officer, and my slogan here is one application, one credit pool. We're going to shop your loan to over 30 different lenders. Now, how can we do that? I'm going to give you all my information at the end of this video. So without further ado, let's get to today's news. Mortgage rates ticked down just a little bit. Is that going to last? Don't really know, folks, because tomorrow, then the next day is when TARRIFS 3.0 come out, and that's going to be a barn burner of a day there. So we'll stay tuned, and I'll let you guys know how the tariffs, as they come in over the next 24 to 48 hours, how the news comes in, how it's affecting all these, not only interest rates, but also the equity markets. So here's what you saw today. About midday, the Dow Jones hit bottom. It was about a 10% correction that it hit. And then all of a sudden, as soon as it hit that trigger level, the market just rallied from there. That was one thing that happened, that correction mode kicked in. Then another thing that happened was you had a lot of companies rebalancing their balance sheets. So if you're an investor, you invest people's money, you have to be in the in vogue stocks. So let's say it's the end of this quarter and you're like, okay, I don't own, whatever's in vogue. Nvidia is in vogue again or whatever. I don't own that in our portfolio. Well, I got to buy it because we don't have it and we need to show it in our perspective that we own it. So they're going to go out and buy it today. So you saw some volatility in the markets. You also saw that over in the VIX, right over my head. The anxiety levels went up a little bit. Look at the VIX over top of my head. It's in the green. That's telling us, think of the blood pressure on Wall Street. So the higher the blood pressure, the more anxious things are and the more things are going to be volatile. So that's what we saw in the equity markets. I thought it was going to be more of a humdrum day because TARRIFS 3.0 is coming up and people are still trying to jockey for that position. But the bond market also did well, and I didn't think it would do that great. But there's an interview with the young lady right through here. She's going to tell us, and really nothing new, but I want to keep bringing up to the fact that the Federal Reserve is monitoring a lot of this stuff. What are they going to do? There's still a role behind there, here for the Federal Reserve, but the Trump administration is more making it a point. We're going to focus in on the 10-year Treasury, which you're seeing right down there below. You see it down there, the 10-year is at 4.208. That was 4.3 about a week ago. So as the 10-year Treasury starts to go down, you're going to see mortgage rates start to follow suit even more, according to a lot of the things that we're looking at in today's markets. So let's get over to see what the next Fed move is going to be. And then I want to show you guys how we fared in all these asset classes between real estate, Bitcoin, Dow Jones, and where interest rates going from here. So let's get over to this interview real quick, and then we'll be back to talk Q1 2025.
Julie, I don't love using the stagflation word, although I take the point. It's how it feels to people and all that. But the market seems to be casting its vote. This is more of a slowdown, wouldn't you say?
Definitely, that's been the focus of late. So, yes, we have been marking up inflation forecasts both on the data and the prospect of tariffs. But now I think there's more of a markdown in the growth outlooks with incoming data. And so really, I think the Fed they told us they expect to see challenges on both sides of their mandate. We agree. We do expect the labor market to feel the pain of some of the Doge activities as early as Friday's report, and to see the labor market losing some steam as tariffs push up inflation. So is that absolute stagflation? Maybe for a moment. But we do expect that the Fed's next cuts will be based on a weakening labor market, not on inflation progress.
Right. I mean, although it will still be frustrating, I'm sure, for a lot of people to go, well, wait a minute, I'm worried about inflation. I see prices rising. But look at something like airfares, as our Leslie Josephs was pointing out. Summer airfares are looking pretty cheap because demand has been so poor. Even something like that is going to feed through and offset potentially, whatever's pushing these inflation readings higher. So there's probably not enough of that it matters, but that's where the weak economy starts kind of pulling some of the pressure out at the margin.
That's absolutely right. I mean, we're already seeing it. We expect to see more. And that's the trick of forecasting this right now, is that we are going to see weakening demand, and that will bring lower prices. We have a tailwind from cooling rents, which operates with quite a lag. So that's going to offset some of the tariffs. But what we're seeing, I think, in the negotiations,
I'm going to stop it right there for a second. She said, you're starting to see it in the housing rents. It's a lagging indicator. Well, housing is 40% of the inflation numbers that they post. So the housing data has been coming down for about a year and a half. It hasn't hit the Fed's target numbers that they're wanting. As soon as that number hits, we're going to have the inflation where the Federal Reserve needs it. That's my perspective on these. Do I think we're going into recession or stagflation? I don't. I think the tariff thing is way overdone at this point. Only time's going to tell. You can kind of, shoot the messenger down below if you want. But that's my take on a lot of these things. But I wanted you to get her perspective on some of these things, because you're going to see more and more things talking about recessions and stagflation. So let's get over to the asset classes now on where things have taken us. And the reason why is there's really no economic news doing out today, tomorrow. Then on the 2nd, that's when all the tariffs really kick into effect. Between now and then, when they launch, we're going to know a lot more about what they are, how much they are, who they are, and what they're against. So we'll be paying close attention to those numbers as they come in. But what I want to go over to here is I want to just show you some of these asset classes that we looked at. I think it was the top 6. So we wanted to look at where mortgage rates, what they did over Q1 of 2025. And then we're going to go down through these other ones. We're not going to take a lot of time. I'm going to look at the accuracy. Then I'm going to just give you my projections or my thoughts on each one of them real quick. So mortgage rates rose. 30-year fix is 7.24. It's saying right here in January of 2025. That's where it was. 7.24. Where are we right now? 6.74. So a nice reduction in that area. I'm going to say that's probably pretty accurate in there. So we're probably down, almost 0.5% since that last reading. Home prices, they didn't give us the data here, but it did say median home prices in 2024 were up 4.7%. That's accurate. We're going to go over to the average median home price. Let's go do a 1-year chart right through here. Let's see what home prices have done. So we're in Q1 of 2024. We don't have that on this chart. So going into Q4 of 2024, it was up. There was a nice trajectory there. So that's the home prices. We haven't heard any places crashing. There's really no excitement anywhere out there. The houses are pretty much just stagnant right now. The Dow Jones, it just hit correction mode, like we were just saying previously. Last year in Q3 of 2024, the Dow Jones was up 13%, so nice gain there. I think the Dow Jones it's saying is down 1%. I'm really not sure, so let's go over to the Dow Jones chart, and I already have these queued up. So Dow Jones, you can go to Yahoo Finance or whatever you want to do to look these up. The Dow Jones is down 12% year to date. So when this thing hit 10% triggered this afternoon, about noon today, that triggered this buy market, and then from there on, the market's kind of rallied from there. So I think we should have hit a short-term bottom there. It's kind of up from here, but again, the tariffs are going to play a huge role in all this stuff. Then we go over to the S&P 500. It had great year last year and the year before. If you go over here, the S&P 500, this is a very good way to invest. If you're a young investor or you really want security in your money, you don't want those big volatility moves. The S&P is the top 500 companies in the country. It's down 4.5% year to date, but last year, look at last year, it was up. We'll go to a 5-year chart. This thing is going crazy. It was up 24 and 25% last year and the previous year respectively. Go to Bitcoin. What Bitcoin's doing? This is all over the map. If you just have play money you want to throw somewhere, throw it at this thing. But Bitcoin year to date, I think this is probably accurate. It's down 10%. But if you go like 6 months, what's it doing? It's up 30%. So if you got some play money, this is where I put my money. Don't trade or do any of these investment strategies or buying anything or any of these recommendations on this video or anything that I say. I'm not an investment person. I'm not a strategist. These are just my comments, and this is for entertainment purposes and educational purposes only. That's my get out of jail free card. So that's our report for today. So nothing really is coming in tomorrow that should really shock in all the markets, but we're just going to pivot at this point to see how these tariffs or the news of the tariffs start to come in, what countries are starting to retaliate, which are coming to the negotiation tables, and how that's all going to affect things such as mortgage rates. So my name is Dan Frio. Like I said, I'll give you my information right now. Here's what I do. If you want to learn more about me, go to the rate update. I've been doing this for 35 years, folks, and I'm actually a mortgage advisor licensed in all 50 states as well as Puerto Rico. Here's the cool thing. Here's the real cool thing is you might say, Dan, you probably don't lend in my state or you don't know much about where I live or anything. Folks, I'm in all 50 states as well as Puerto Rico, and I've been doing this forever, and I'm set up with, here's the cool thing. If you're really shopping, you want to make sure somebody has the program that you want, and then you're like, okay, do you also have competitive rates? What if I said by putting in your application right through here, right at the rateupdate.com, we're going to shop your loan over 30 different lenders. How do we do that? Well, I work at a federal bank. That makes me federally licensed all over the country, but we're also set up with 33, I count them the other day, 33 other lenders. So what happens is I'm your loan officer. I can either do your loan at our bank or I can actually facilitate it through these other banks, and I'll be your loan officer throughout the whole transaction. So basically it's one application, and then we're going to shop your loan over 30 different lenders because we want to work with you from application to the day that you get keys in your pocket. So how to reach out to us, just go to therateupdate.com. You can put in your application right up through there, folks. We won't pull your credit. I promise you. We'll get in touch with you before we do anything. If you'd rather schedule a consultation because you're like, I don't want to put my social security number and all this stuff in, I get it. Schedule a consultation right up through there or give us a call. You can scroll down at the bottom of our website. You can see it right down through here. It's 844-775-5626, or you can reach me personally at dan@therateupdate.com. And this is me, folks. So please answer or send any questions that you have, concerns, help. Give me your phone number and your contact information, maybe even the best time to reach out to you. Love to be able to call you, answer that question, or maybe some other questions that you have. So thanks for watching. God bless. Have a fantastic afternoon, and come back tomorrow morning so we can see how all this mess starts another day, folks. Take care. Be safe out there, folks. Bye-bye.